Is your credit stinky? Today we've got some answers for you. Hi everyone, I'm Tom Peach with Tom and Cindy and Associates at Long & Foster, and we meet with a lot of buyers who have good jobs, they make good money, but their credit may stand in the way of them purchasing a home, at least right now. So let's get some answers for them and for you if you find yourself in a similar spot. Whenever I have questions about loans, I like to take a drive to Chantilly to the source. I'm going to meet with Dave Rotel, Area Sales Manager of Prosperity Home Mortgage. Come on with me. Hey, Dave.
Hey, Tom. How are you, buddy?
Great to see you, man.
Great to see you as well. How's everything?
Busy? It's good. It's good. We're crazy busy, but I'll tell you what, as always, I got a couple of questions for you.
Well, sure. Happy to answer any questions I can.
All right. So, as you might imagine, we get buyers all the time. They call us about a home. We start the conversation and sometimes meet up with them. They come to the office, and it turns out their credit's not too good. Mm-hmm. So I just wanted to ask you, what do these people do? How long does it take? Is there anything they could do? I know sometimes you even have these people who say, you could pay me money and I'll fix your credit. What are your thoughts on that?
So I'll give you a couple. Well, credit is a real specific question per each customer, but let's talk about the generals.
Okay.
So we'll talk about the extremes first, and then we'll bring it back into the more common situations. Foreclosure. So if you go through a tough situation with foreclosure, it's typically a 7-year waiting period. Now, bankruptcy for Chapter 7 for conventional products is a 4-year waiting period after it's discharged. And if you're doing a government loan like an FHA loan, it's 3 years, so not quite as bad. But on the general situation, hey, life happens. The last 2 years is a perfect example where people get thrown all kinds of curveballs with COVID and everything else.
And sometimes we'll have a couple that, we see them after they were divorced and their spouse ruined their credit or whatever, or just maybe their first-time buyer, and for whatever reason, they have a few dings on their credit.
Yeah, so now once again, it's all specific per each individual, but general, you like to have 2 years of clean credit. But you know what, with FHA, you have some more flexibility with your credit, so that helps a great deal, especially for first-time home buyers. A lot of flexibility there that they'll really, really enjoy. So you hear always the term credit scores.
Sure, you hear numbers.
Credit scores, so you get the numbers. So with credit scores, just as some general guidelines, conventional loans, your minimum threshold is 620, so you want to stay above that. Okay. Now your overall credit still has to be reviewed, so it's not you're instantly approved at a 621, but that's a floor to keep in mind. For FHA, I was talking about that extra flexibility. Okay. So for FHA, it's a 580. So you want to stay still north of that, better than those numbers, but that gives a lot more flexibility.
For some reason, sorry to interrupt, but I mean, if you have 600, 620, and then somebody who has, is someone who has an 800 credit score getting actually a better rate than somebody that has a 600?
For most programs now, they try to keep everything flat for credit score, but there are some differences with some different products. So there is some fluctuations. It depends on the product specific.
Mm-hmm. And then if someone, let's say, you said with FHA 580. So let's say someone comes in and they have a 550 credit score.
Sure.
How long does that take for them to repair that, if you will,
sure,
or get it up to where it could be acceptable and they could get a loan?
So 2 years is still a great idea for a rule of thumb, but you can do it much quicker than that. It really depends on how dinged up it actually, how much damage was done on the credit specifically.
Okay.
But some folks getting a year just under their belt of clean payments. So remember, it's not just no payments, but clean payments. That may get them to the score that they need to acquire. Talking to a loan officer throughout the process will help out a great deal. They'll give you some very specific information about what may be helpful as well. But there's a lot of good, unique things that when you look at their credit report that you can sit there and say, hey, if you tackle this right here, that's going to make a big difference with your score and so on and so forth.
So even though they might be a year or two away from actually being able to purchase the home, getting together with a lender early on in the process and working towards that good credit or good enough credit is a good idea?
I think it's a great idea. A great idea.
Okay, great. And then last thing is, you know how everybody's trying to make $1, and you hear sometimes these ads where somebody says that they can repair your credit if you pay them, of course. Is there anything some company like that can do that's going to help speed the process up?
That's a great question. So, and when I say not great question. So you've got some folks that really try to do the right thing and help folks out. I look at the Better Business Bureau, look for some advice on that. There are groups that have had some questionable reviews later, to say the least, and some that really try to help out the customer and really try to keep it cost effective. I would do some research on that piece specifically, but it all starts with the loan officer first, because the loan officer may be able to help you with some of the quick questions right out of the gate where you don't even need to go down that path.
That's great. Now, what about if, say I needed a 620 credit, but my credit was 610, but someone was going on the loan with me? Would that be like, or you're getting a gift letter or putting more money down? Do those matter, or is the credit really?
Credits for most of the products, the credit score is still pretty key if you're going to be on the loan at all. So where a co-signer may help a great deal is for income qualifications, but credit, you still want to have those thresholds in mind that we mentioned before: 580 for the FHA, 620 for conventional and other.
Great. So it's good to pay your bills on time.
Always great to pay your bills on time.
Good to pay them, period.
Agreed, completely.
Well, that's great. Well, thanks again for answering that.
Always
really
a pleasure.
Appreciate it, and I'm sure we'll be back. We always got questions.
Tom, anytime you have a question for me, buddy, I'm here for you.
All right. Appreciate it, Dave.
Great seeing you, Tom.